Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me is Priyanka Uppal. And Priyanka, well, terrible Tuesday coming in for our markets today. It's been a rather weak trading session, if you could call it that, especially after the exuberance that we saw coming in on Friday. Yesterday was rather tepid, but today has been a rather fizzled out trading day because of 1.5% cut almost coming in on the Nifty today. You had sensex following suit. In fact, on the Nifty, we've not even managed to hold to those 24,350 levels, and sensex also we've seen quite the cuts, but 80,500 is something that we have sustained on the sensex today. Broader markets also did not do all that much. A 7/10, 8/10% cut coming in on both the mid cap and the small cap index as well. If you take a look at the India wicks, that is something that spiked up in today's trading session. At one point, we were almost 5% higher. We cooled off a little bit on that front, but continues to be above 14.5. Advanced decline ratio very steeply in the favor of the declines, and out of the entire Nifty 50 pack, you only had one stock that's closed in the green today, and that is Cipla. Biggest loser on the Nifty 50 pack today: Shriram Finance, Grasim, Bharti Airtel, JSW Steel, Hero Moto, Indus Bank, or IndusInd Bank, all of them trading with cuts of more than 2.5%. So looking rather weak when it comes to that. However, there were some pockets in the market today that did pretty well. You had brokerage notes coming in on Quest Corp and Piramal Pharma, so both of those stocks had done very well in trade today. A couple of other sectors, the likes of fertilizers, pull up a fact, RCF, National Fertilizer, GSFC, all of these stocks have done well today. A couple of news flows coming in for the likes of ITC on the hotel business demerger, so that was in focus today. There were pockets of value. It's not like the entire market was down today. Some stocks have done really well, so that went well today. A couple of other stocks, in fact, we've seen some adverse action coming in on some names. They were locked in lower circuit today as well. Priyanka, tell us more about what you spotted in the market today.
Did you see that looks like the reasons are on the macro front that we've seen.
Yes.
A lot of central bank action which is awaited for this whole week. Fed on the watch list, Bank of Japan, in fact, Bank of England, the policy decision, central policy meetings outcome. This is what investors are eyeing keenly at. And also, let's not forget, dollar index is again surging. Like it has already surpassed 107. And this is what is making metals melt at this point in time. Dual reason. One is, of course, weakness, the underwhelming economic data which came in from the consumer country like China, and secondly, the dollar index which is strengthening back. In fact, if you see, there's an inversion on the bond yield also. When that's how the Dow and US markets also reacting to it, and hence could be a macro reason, could be the fall. What we've seen, such a southbound move on Indian indices also. But then, yes, you talking about subsectors. Look at the hotel stocks; they were buzzing, and that is on the possible GST cut. GST Council meet has to happen on the weekend, and possibility there could be a GST cut on hotel delivery stocks. That is one space which was buzzing. Fertilizer stocks, RCF, NFL, Madras Fertilizers, they were buzzing in possible DAP price hike, and that is hike which is coming in after 4 years. This is what subsectors. But then look at, we'll get to an exclusive story on SpiceJet also, wherein it is preparing a blueprint for a revival plan. Possibly they might come up with a QIP also. So all this we get you in the show ahead. But let's introduce our technical expert for the show today to understand how to navigate this volatility. In fact, it's just a clear-cut pressure on the markets. Are we in for some more lower levels from here, or is there a possibility of recovery in tomorrow's trade? Aamar Singh joins in from Angel One. Aamar, thanks so much for joining in. Tell us, we could see clearly, though Nifty has been managing to close above 100 DMA, but there was a resistance 24,700, and more conviction what experts were voicing in could have come only if the Nifty has surpassed 24,500, which it failed to do. What is your current view on the market? We've seen put buying happening of the lower strikes. What do this indicates? Are we in for more cuts from here?
I would say that if you look at Nifty from an intermediate term perspective, the charts are very weak. So when I'm talking to the intermediate term perspective, I'm referring to the weekly charts, because there some of the technical indicators are very negative, and they haven't been that negative in quite some time. So that's the reason at higher levels we are witnessing a selling pressure and also profit booking coming in. That's one. Secondly, from a long-term perspective, if you look at Nifty on the monthly charts, that still continues to remain positive. So that's the reason we are seeing this sort of choppiness in Nifty. And the recent lows that Nifty had made of 23,200, 300 zone, that's going to act as a short-term bottom, no doubt about it. So that's going to play a very important role. Having said that, on the upside, resistance is seen around the 24,600, 800 zone, immediate zone of resistance. If that is taken out, then it could head higher towards the 25,000 mark. But sustaining at the higher levels is definitely going to be a challenge for two reasons. One is that the news flows also, which are there, be the domestic news triggers, they are also not been very positive. So that also not helping. One. And secondly, we are seeing that the heavyweights like Reliance has been in for major selling pressure. HDFC Bank, which was in for a rally, now that's also witnessing some sort of profit booking. Apart from that, some of the other heavyweights are also witnessing, save apart the IT sector. So I think, and also if you look at the broader market sense, so advances versus declines, that's also in favor of the bears. So that's the reason we are seeing this choppiness. One silver lining is that despite some correction, we are still seeing India VIX within very reasonable levels. So I think that clearly shows that investors are not that much duly perturbed. So that's a positive sign, but more or less we'll witness choppy trading sessions in coming days, the levels which I've already spoken about.
Okay, so some choppiness is what you're expecting, Aamar, going ahead. And, seeing today's trade, I'm not even surprised that you're forecasting something like this. But amid a trading setup like this, Aamar, tell us what would be safe bets right now? Where are you seeing value and some pocket of comfort, some degree of comfort coming in? What are your bets?
I would say a couple of areas one can look at. One is definitely FMCG. We've seen some very sharp correction there, and most of the stocks, be it ITC, be it Colgate, be it Marico, Dabur, these are some stocks which one can look at from a medium-term perspective. That's one. Secondly, in the IT space, again, as I was listening earlier, you're talking about the dollar index gaining a strength. So that means that the rupee could depreciate further, which is positive for the IT space, and that is also helping the IT stocks. So TCS, Infosys also can be looked at. Infosys sustaining of the 22,000 above the 2,000 mark could witness a sharp rally towards the 2,100, 2,150 from a short-term perspective. So that's one area one can look at. Apart from that, hospitality sector is also an area where one can look at for the likes of Lemon Tree or Indian Hotels. These are stocks which one can look at from a medium-term perspective. So these are certain areas which or certain sectors which one can definitely keep a close watch.
So these are now the immediate recommendations. So you need to hold them for a little longer time. Hotel stocks is what Aamar is recommending. Other than that, he's also recommended us hotel stock as well as fertilizer stocks is that we've been eyeing on. And of course, IT stocks, IT stocks on the back of the dollar index strengthening and rupee weakening. Thank you so much, Aamar, for the quick update on the on your view on the markets as well as on your recommendation. Now, moving on, let's get you some more key stories. We did speak to Gautam Shah, who's a CMT founder and chief strategist for Goldilocks, to help us navigate the volatility from here. He believes that banking will be the sector for next 1 year to come. Let's listen in his top picks from banks and NBFC space.
Well, we have been making the point that banking is probably the sector of the next 1 year. I think there has been a big valuation and chart gap between a Bank Nifty and the Nifty, and I think that's getting corrected. And in October, when the markets corrected about 10%, you had the Bank Nifty absolutely flat. And I think that's the point that we made all along, that Bank Nifty, just based on that data, should outperform. So the going has been good, and I do see the Bank Nifty moving towards a level of 55,000, which is our near-term target. And if you have to take a 6 to 12-month view, I think a 60,000 on the Bank Nifty is easily possible. Now, if you look at the top stocks, I'm very encouraged the way they have all played out in the recent past. HDFC Bank at lifetime highs and sustaining well. SBI coming back strongly. ICICI Bank sustaining at lifetime highs. So I'm still with the big boys. I think in every sector of the market, I'm trying to stay with the top 2 or 3 names, because I don't think this is a market to be adventurous into. Any market correction and a lot of stocks can correct very quickly. So I like to stay with the big names, the top names, because I think the concept really is winner takes it all. I think in the current market environment. So I think the 3 names which I mentioned in banking we like. In the NBFC space, I think Bajaj Finance has been a favorite for a long time, and we've talked about it multiple times. So that's another stock, and that's another basket, NBFCs, which I think should do well after the recent RBI commentary.
What coming in from Gautam Shah about banks and the other sectors that he likes, including financials. But on that note, we'll slip into a short break on your trades. When we come back from on the other side of the break, we'll take you through what the derivative setup has looked like for today. So you stay tuned. We'll be right back. Hi there, welcome back to Your Trades. Let's take a look at how the F&O space, the derivative space, has shaped up to be today. Trend for the index futures is for the December expiry, of course. The trend for Nifty, short build-ups being seen on that front. Not surprised after the kind of trading day that we've seen today. Short build-up also being seen on Nifty Bank, so that's looking slightly negative. India VIX at 14.5, but like Aamar said, these are levels that do not alarm any caution as of yet. It shows that investors are not highly worried about what's happening in the market. So looking good for now, at least on the India VIX part. Let's buckle up and take a look at just wait and see how the India VIX shapes up, because Aamar did say that we are expecting some more volatile days going ahead. Now, when you take a look at the active calls and active put levels for the Nifty, so 19 December expiry, active call writing was seen at 24,400 and 24,500, making 24,500 the next resistance, the next level on the upside to watch out for. However, when you take a look at the active puts, then put writing was seen at 24,300 and 24,200. That's the put buying where that was seen. We don't have a support level as of now because the market is falling. It's been heading in the south direction, like Priyanka pointed out today, and we don't have any visibility on the support right now. We can only hope for some recovery tomorrow, but well, seems difficult right now, Priyanka.
Looks like an early Santa rally has already played out.
Santa, I would be very careful for calling it a rally.
But then let's move on. But there were a couple of stocks, which were doing very well majorly on the back of brokerage notes. So Gaurav is joining in with two stocks he'll talk about, and the key notes, which Piramal Pharma is supported, and Quest Corp, the kind of move we've seen in Piramal Pharma as well as Corp. Gaurav joining in with the details on those notes. Gaurav.
Well, yes, even in this subdued market, we have got two stocks which are buzzing on the back of the brokerage note. So first, let's talk about Piramal Pharma, where JM Financial initiated with buy rating at a target price of 340 rupees. What they're saying is that revenue can increase at a CAGR of around 15%, and the key concern for company, which was actually cash generation. Now, JM Financial believes that EBITDA can grow at a rate of around 23% over the next few years. That can take care of cash generation as well as net debt. That was another key concern for investors. Apart from that, when we talk about valuation, JM Financials have highlighted that given the valuation of around 21 times EV to EBITDA, it is currently around 40% discount to peers, and that is the reason why they are being bullish on this stock. And as a result, we are seeing some uptick in this counter as well. Other than that, let's also talk about Quest Corp, because here we saw Antique actually initiating with buy rating and a target price of 1,000 rupees, which provided more than 40% upside. And the reason being that when we talk about revenue, what they are saying is that the company can grow the revenue at a range of around 12 to 14% over the next few years. And the reason being that when we talk about staffing industry, the outlook is very positive, and even in the staffing industry, Quest Corp is actually growing at a CAGR of around 20%, which is 200 to 300 basis points higher than the industry. And Antique also believes that the company can actually continue to do so. Other than that, when we talk about some other parameters, company is also one of the top 5 staffing companies across the globe, and that is the reason why this bullish view is coming up from Antique. And given all these factors, when we talk about stock performance also, it is up in trade more than 5% in a day itself. So definitely watching out on both these counters on the back of very positive note that is coming from the brokerages.
Okay, Gaurav, thanks for taking us through that. Piramal Pharma and Quest Corp buzz on the back of two brokerage notes today. But let's shift focus and talk about a stock that wasn't doing all that well today. A 1.3% cut is where the stock is closed, and that's SpiceJet, because that company is preparing a blueprint towards achieving the goal of reviving the airline following a 3,000 crore rupee fundraise that they have already done in September. SpiceJet is aiming to put its 25 grounded aircraft back in service and become cash flow positive by March. My colleague Samir Dikshit, who tracks aviation closely, is joining us with all of those details. Samir.
The move to revive its fortune after raising fresh funds of rupees 3,000 crore through QIP, SpiceJet airline has formulated a three-way strategy. The first is to improve its financial, and for this, SpiceJet airline is targeting to become a cash flow positive company by March 2025. And in the same direction, SpiceJet airline has cleared, so far they have cleared 70% of its statutory dues, whether it be related to employees' salary, the pending salaries, the GST, TDS, or even the PF dues, and the remaining they are likely to clear very soon. Second is to expand the fleet size. Currently, SpiceJet operates 28 aircraft. Earlier, they were having just 21 aircraft, but after raising the fund, they have expanded the fleet size, and they are targeting to have 35 operational aircraft by March 2025. The larger goal is to have 70 aircraft by FY 2026 and 100 aircraft by FY 2027. Still, SpiceJet Airline has got 25 grounded aircraft which they are looking to revive with the fund infusion. And for the same, for the revival of the grounded aircraft, SpiceJet airline has set aside rupees 800 crore, and they are working on the same. In addition to this, now SpiceJet airline is also looking to expand and to increase the flight frequency. They are looking to have more flight under Udan Yojana, and they have got exclusive flying rights to Middle East destinations where they are looking to expand, increase the flight frequency. In addition to this, what we are also picking up from our sources that in 2025, SpiceJet airline will be starting seaplane operations on selective exclusive route, whether it be Shillong, Guwahati, Lakshadweep, or even in Gujarat. For the same, they have got a venture with a seaplane operator, seaplane company, de Havilland, and very soon SpiceJet will enter and they will start seaplane operations as well. So with all this initiative and the strategy that SpiceJet has formulated, they are looking to improve their performance. But the first and the immediate goal that SpiceJet airline is looking at to become a cash flow positive company by March 2025.
Thanks very much, Sameer. We'll await more details on this story. Moving on to another exclusive, ET Now exclusive, and that's a big budget exclusive coming in. The government is likely to rationalize custom duties on various raw materials in the steel sector. My colleague Prakash Priyadarshi joins in with more details on this. Prakash.
Yes, we are learning from our sources that the big relief expected for the steel sector in the upcoming budget. We are given to understand that the government is likely to rationalize basic custom duty on various raw materials used in the steel sector. We are given to understand that the finance ministry is considering the proposal made by the industry, and the idea is to rationalize basic custom duty to provide affordable raw material to the industry. We are given to understand that the basic custom duty, that is BCD, on coking coal is likely to be reduced to nil from 2.5%. As you are aware, that the country is largely dependent on imports to meet domestic requirement when it comes to coking coal, and therefore industry has approached government to reduce basic custom duty to nil from existing 2.5%. Along with that, the industry is also of the view that basic custom duty on imports from certain countries through FTA has already been exempted, and therefore it is time for the government to exempt basic custom duty on import from all countries when it comes to coking coal. In addition to that, we are also learning from our sources that the basic custom duty on ferroniobium is likely to be reduced to nil from existing 5%. Industry has also asked government to reduce basic custom duty on rolls to nil from 7.5%. In addition to that, basic custom duty on refractory materials is recommended to be reduced to nil from existing 7.5%. So these are the wider recommendations when it comes to basic custom duty on various raw materials used in the steel sector. When it comes to aluminium sector, we are given to understand that the industry has urged government to declare the road tip rates for the aluminium sector, ACZ and UOEUs. These are the major recommendations made by the industry to the government.
Okay, thanks so much for taking us through that, Prakash. But let's now take it across to my colleague Jinay, who's been waiting by with a list of all the stocks that were in focus today, either on the back of their news flow, positive or negative. Jinay, take it away.
Well, definitely. Let's start up with ITC. The company reported the effective date for the demerger of their hotel business is January 1st. Now, earlier the company did say that the ITC shareholders will get 1 share of ITC hotels for 10 shares of ITC each held. Second, TARC is in focus. SEBI has hired an forensic auditor for companies with respect to the financial statement of FY21 to FY23. This is because due to an alleged discrepancy in their financial reporting. Moving on, RBL Bank, that's in focus as the company cut its guidance for going forward. The company is now expecting a modest low double-digit growth versus a 15% growth year-on-year basis, and the company said that during a City meet. Moving on, Granules India will be in focus as company's arm, wholly owned subsidiary Granules Pharmaceuticals, which is USA based, has received an approval from US FDA for its ANDA for certain chewable tablets. And lastly, Chola Investment and Finance, that's the stock was in focus, has downgraded it from its earlier rating of add to hold, and have also cut the target price to 1300, and this is mainly because of unfavorable risk to reward ratio.
Right, thanks very much, Jinay, for bringing all that stocks and the news behind these moves. With this, it's a wrap on this edition of Your Trace. Thanks so much for watching.